Okay, welcome back, investors, to Ticker Time News. I'm Adam, and get ready for more twists and turns in the market this week, as it's actually a short week for trading because markets are closed on Monday for President's Day. So here's how we stand right now. The Dow Jones futures, along with the S&P 500 futures and NASDAQ futures, have all taken a sharp turn down amid widespread expectations that Russia will invade Ukraine in the next several hours or days. Plus, investors are still wondering this week about what the Fed's next moves will be. What are they going to do in March? Raise rates by 50 basis points, 75 to 100 basis points, and go that extreme and that hawkish? Or maybe a little softer and dovish, maybe 0.25%. We don't know. So that's FUD and fear in the market right now. Now, the stock market rally, it did suffer a significant amount of damage last week, with the major indexes below key support levels, and they're starting to move back towards their January 24th lows. If we look at the chart here in front of you, this is the S&P 500. And right now, we've got this big yellow box right here as a target for where it could go, down below 4,300. And I've been calling since the, beginning of January, middle of January, January 24th, 14th, when we broke this support up here. Let me just real quickly, I should have had my drawing tool out already. When we broke this line right here on the 14th of January, so when I called it 4,200 for the S&P 500, we got 22 points away from that on January the 24th. And now we're headed back in that direction right now. If we hit that, that is going to be a very worrisome signal for the market. Okay, we've got that. Now, earnings due out this week come in a very wide variety of different earnings, from Coinbase to Macy's, Dell Technologies to even Block, and all kinds. And we'll get into the ones I'm watching specifically this week that I think will move. Now, there are many, many others, like I just said, of stocks that are or companies that will be reporting earnings this week. And there is a lot the options market is saying about some of the moves. Now, on the economic calendar, we get updates on new home sales and durable goods orders, all right? Also, the oil market will be in the spotlight this week, of course, with the Russia-Ukraine developments and how they play out, and the prospect of higher production out of Iran, ironically, that will be thrown into the mix of the oil market as well. All right, before we get too deeply into our Catalyst Watch for this week, can you smash that like button, share this video, and consider clicking on the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. That's 40 high-quality stocks ready to choose from that we're constantly updating as this market ebbs and flows. You always have the best names available. All right. Thank you, my friends, for doing that. Okay. The home improvement sector and the trends in that sector will be in the spotlight this week, as Home Depot and Lowe's both report earnings. Home Depot on Tuesday, Lowe's on Wednesday. The setup looks really strong for both home improvement retailers, with the housing market remaining solid amid a backdrop that includes an elevated home price, healthy remodeling activity, and of course, solid household formation. Yes, formation. We got families that are in these homes, and we've got kids coming back to their parents, older parents going back to their kids. It's been a mess in the market, and a fear in the housing market right now is that first-time home buyers especially, and then of course other home buyers in the market, are just going to get priced out of the market, just completely obliterated and priced out of the market, and won't be able to afford to buy a home. As many of you know, I've been looking to relocate here in Northern Virginia now for months, and being in a wheelchair, I've got to be kind of particular and picky on the type of property it is, but homes go up on the market and then bam, in a couple days, they're gone. Or in some cases, they go up on the market and the very same day, they're gone. They've been bought. It's crazy. But with the home trends, right, in the housing market for Home Depot and Lowe's, what about inflation? Is inflation going to be a problem? Well, I think I have a clue to that. Tractor Supply, ticker symbol TSCO, they reported that inflation actually helped them in their Q4 comparable sales by 800 basis points, and that pricing pricing pass through, I guess is the correct term, when they pass on the pricing to the consumer, right? That led to zero demand destruction, right? So consumers were willing to pay the price, and they didn't balk at the price. They didn't see consumers coming in saying, oh, that price is too high, I'm out of here, I'll go find it someplace else, right? Tractor Supply didn't see that. So that bodes well for both Home Depot and Lowe's. Okay, out of the Dow 30, the Dow Jones, and the 30 stocks in it, this week I'm going with Coca-Cola, the Coca-Cola company, ticker symbol KO, as in a knockout for this week. Now, Coca-Cola is forming a very bullish signal here on the charts. They've been on a nice move so far this year, with the S&P 500 being down and all the major indices being down this week. Coca-Cola, year to date, Coca-Cola is up 5.6% year to date. So they've been able to buck the trend and have their stock be in the green. So I'm going with, out of the 30 Dow stocks, Coca-Cola, ticker symbol KO, this week as the winner in the Dow. Now, Coca-Cola is a strong consumer defensive stock. And what did we see at the end of last week? We saw many investors and traders go and take a defensive stance and get into defensive stocks. Coca-Cola is one of those defensive stocks, and they're in a breakout right now. The conditions with this, they also have high net inflows from the safety trade in the current market conditions. They have earnings beat on February the 10th, and they're adding to investor inflows as well. Also, and this is a big key right here to why I'm picking it, institutions are net buyers in this quarter. So that's Coca-Cola. Also, PepsiCo, which I'll talk about later in a moment, but just real quick, Pepsi's CEO will speak at a conference this week, and that could help move Coke stock as well. So there's a couple of things lining up in Coke's favor, and that's why I'm picking it as my top Dow stock of the week. Okay, let's get into this week's daily catalyst. Monday, February 21st. Well, the stock market's closed, so I guess any pick I make will do pretty good, right? At least break even. All right, let's move on to Tuesday, February 22nd, and we get earnings from Home Depot. HD is the ticker symbol for Home Depot. They have pulled back over 16% year to date. They have an estimated EPS of $3.18 a share, with revenue of $34.88 billion. That's a big amount of revenue. Now, the options market is showing an 8% move off of those numbers, and you can see the problem, the resistance that Home Depot has been having, especially over the past couple of weeks. This line, this purple line descending here across your screen, Home Depot has not been able to break through this line to get back above it and to get back moving in the right direction since they started falling going back to January the 3rd. The very first trading day of this year started out in red, and it's been the predictor so far for Home Depot. Can earnings turn it around? On Tuesday, we'll find out. Now, if they're able to make an 8% move, like the options market is saying, to the upside, that will definitely push them through this resistance right here. Now, for me, if Home Depot were to go the opposite direction and come down by 8%, I want to show you something here. Where it's at as it closed on Friday. If we come down 8%, look at where that puts us. That puts us just under $320 a share. For me, that's when things start to get interesting for Home Depot, as in growing a position, starting a position, looking for a way in. That's when it gets interesting. For me right now, if it were to come down a little bit more past 8%, maybe about 15%, and we get sub $300, that's when Home Depot looks really interesting to me. And I think the housing market is going to remain strong for 2022. Then we might have some problems with people getting priced out of the market, like I mentioned at the very beginning of this video. But until then, I think home improvement will do good. And once we get out of this rut we're in right now with the FUD, the fear, the uncertainty, and the doubt in the market, we will then start to be moving in the upwards direction. Now, I've said this since day one of this year. I don't think it's going to be a big winner this year. Last year, the S&P 500 did about 27%. I don't think the S&P 500 is going to crack 8% for the entire year. I think it's just going to be moving sideways. But we do have opportunities for consolidation and adding shares, right? Adding shares. So when the market does go up, we've accumulated, just like in the crypto market. When crypto comes down, we accumulate coins, we stack them, right, one on top of the other. And then when the market goes up, we've got the coins, we've got the stocks. So just keep that in mind as the market does continue to come down. All right, so that's Home Depot, potential 8% move there on Tuesday. Macy's also reports earnings on Tuesday. They have an estimated EPS of $2 a share on revenue of $8.46 billion. Now, watch out for guidance here on Macy's, as sales could be forecasted to slow down in the second half of 2022. We've heard that from other retailers also, that, wait a minute, hold on. I think consumers are going to slow down their spending in the second half of this year, and it's not going to be so wild like the retail report that just came out, right? So just keep that in the back of your mind for Macy's. Sorry, I didn't pull up the chart there. Ticker symbol is M for Macy's. You can see they've been moving sideways all year long, so they're not really down a whole bunch for the year. They're down 1.8% on the year. They've just really been moving sideways. And this right here is a good example of what I think the S&P 500 is going to do for the remainder of 2022. And that's just move sideways. All right. Hello, Devin. It is glad to see you, sir. I am so glad to see you. It's been a while. Does widespread pricing gouging cause accelerating inflation or temporary higher inflation fear? Lots of opportunism in the auto market as one example. Okay, so when a company sees an opportunity to raise prices, sometimes they do it, sometimes they don't. One example would be Roku. The price of TVs have gone up. Manufacturing TVs, the price has gone up. But Roku has not pushed through those higher expenses to customers. So Roku is absorbing those costs, which is causing margin compression at Roku. That's why their earnings were not all that great. That's one reason, but there were several others. But to stick to this example, if a company then does pass through their prices, like in the auto industry. They've been passing those prices right through. Tractor Supply is another retailer who's been passing the prices right through. What that will do is it can create long-term inflation. And the reason it can is a psychological reason, not really a market condition, right? People get used to paying higher prices. It's almost like the same trick that is on your mind when you get a raise for $1 at work. That feels wonderful. It feels great. Oh, I'm making more money now at work. I just got a $1 an hour raise. Well, if the boss comes to you and says, you know what? You did great this year, but we need to cut costs and I need to take that $1 raise I gave you last year away from you. You feel even worse. You feel 10 times worse that your pay just got cut. So sometimes when these companies pass through these prices, they will stay elevated and they won't come back down. So that's a fear of long-term inflation, that the prices become structural, built in, and then they don't come down. That's why long-term inflation is really bad for an economy. Temporary inflation, not so much, because you get a price influx, but then the price comes right back down. It doesn't get structurally built into the system like a lot of prices are right now. So I hope that answers your question, Dave. Price gouging causes accelerated inflation. Okay, I don't think I said accelerated inflation, but it will keep inflation from coming down. I don't know that it will accelerate inflation higher as much as it will keep inflation higher and not allow it to come back down. Did I make sense with that and how I explained it? Let me know if I did, or if you need something else. All right, you are welcome. Greatly appreciate it. Thank you for the question. Ask me anytime. I'm always here for you, whatever it may be. All right. So then I'll hop back on this. On Tuesday, another company reporting is Palo Alto Networks. Ticker symbol is PANW. Now, companies like Palo Alto Networks are going to, their demand is increasing, right? Their demand is increasing. But a problem that we have is with, of course, inflation. And the second problem is rate hikes. It always crushes technology, and it causes the margins for technology companies, especially any type of software-based company that's not selling a physical hardware product, for their margins to compress and to get smaller. And what does that do for investors? Oh, this company didn't make that much this past quarter. Well, so their share price comes down. All right, so Palo Alto Networks does have a small problem with that, but they also have a problem of demand's going to increase. And will they be able to have the capital to capitalize on that demand? All right, so that's Palo Alto Networks. Now, they report earnings of $1.65 per share on revenue of $1.8 billion. Now, the options market is showing a 13% move for Palo Alto Networks off of their numbers. Now, that can be 13% to the upside, 13% to the downside. It's either or. The option market doesn't show us which direction as much as they will show us what the implied volatility is, what the historical volatility is, the difference in volatility, and then that's how they calculate how much the one-day event volatility will be for a company. So that's where these numbers come from. So with Palo Alto Networks, you can see they've been moving sideways since November, and they're right now sitting at support. So they could be, investors could be thinking, well, you know what? Rising inflation, rising interest rates right around the corner. Maybe we need to start bringing the cost of this down, take profits, sell out. And then what happens if they have a good earnings report? Well, it's already been pulled down to the bottom. It's ready to rubber band back up. So with earnings, it's always important to pay attention. Don't try to do, 10 different companies on the same day. Pick one or two for one day and watch them closely. When the earnings come out, check the numbers, and then you got to act quickly on what you think is going to happen. All right. Another one that is going to report that I might say, you know what, maybe let's not get too close to this one. It's Teladoc Health. Ticker symbol is TDOC. They also report, now they have earnings on this one, but be careful. This is a growth stock. It's down nearly 30% year to date. But Teladoc Health has an estimate EPS at a loss of 57 cents a share on revenue of $547 million. Now, the options market shows implied volatility, and I didn't pull this up, did I? Yeah, I did. TDOC, got it. Implied volatility of 91% with an expected 22% move off of earnings. Now, that's pretty big. That's a very big move, over 20%. Now, let me pull this in and get a little closer here. Now, for Teladoc, it's a Cathie Wood favorite. I don't have to say that. I'm sure most of you know that. But if this thing were to move 20% in either way from where it closed on Friday, let's see here, 22% up will take it from 65 to 80. And then here's the interesting thing, 22%, if we go down that amount right about here, it takes us from 65 to 50. 65 to 50. Now, if it does drop that 22%, then it puts Teladoc Health in this range that I've had marked out. A low of about $35 up to a max height of $55. That's a range where I would consider, all right, maybe this could have some, I can see the benefit of this, definitely. I use it with my doctor every month, so I can see the benefit to it. But I don't want to pay an outrageous price for a stock, right? So it coming back down is, I think, a good thing. If we look here, it is down 77% over the past 365 days. That is good. If this got back down, under 55, if it got into the $30 range, I think that would be an excellent time to start looking more seriously at an entry point here. But look at this fall. It has just been huge. And, I don't know what Cathie Wood, sees in, buying so many shares when this thing was up here, $150, but more power to her. But we don't always get it right, including myself. All right, another one that reports earnings that has been hurt by the market is Virgin Galactic. Ticker symbol is SPCE. Virgin Galactic reports earnings, and they've been in a downtrend. You can see it, just like Teladoc Health. They are down 37% year to date, but of course, way more than that. Let's see here, real quick. 83.5% over the past 1 year. That's a huge discount. It's back down under $10, and for it to be this low, I mean, we literally have to go back here when it was just the SPAC before any news about the SPAC merger happening. We have to go that far back, back into, let's see, September, October. at the latest there of 2019. How many of you, let me know in the comments, how many of you were investing in 2019? Or are you more of a newer investor who got started during the pandemic, maybe 2020, 2021? Let me know in the comments. If TDOC tanks, Kathy is in big trouble. You are absolutely right. I think so too. I really do. I mean, you just can't hold on to a loser, a loser, a loser, a loser. You got to cut your loss at some point and then rethink what you're going to do. Now, I can understand her innovation thought, and companies are going to innovate, and let's buy them, bring our cost basis down, and accumulate. I can see that part of the argument, but yeah, I don't know. Sometimes, not I. 2020 filled me with temporary wealth and false hope. A lot of people, when 2020, after March of 2020, of course, April, June, and then moving on through 2020. I mean, you could literally throw a dart at a random list of stocks and you probably could have made a 50% return. It was just incredible. And a lot of people who were on YouTube were getting hundreds and tens of thousands of followers because they could just pick any stock and that stock would just shoot up. And oh yeah, you're a wonderful stock picker. Let's watch your videos. And that actually got me excited to start sharing my thoughts here on YouTube. So I don't see it as a negative, but it was definitely a different environment than it is right now today. So yeah, just a little story there. Okay, back to Virgin Galactic. They are expected to have a EPS loss of 35 cents a share on revenue of only $331,000. And I double checked that. It's not million, it's $331,000 in revenue. So they got a long ways to go. Now, the options market is just crazy on this one. The implied volatility for Virgin Galactic is 107%, with a potential move of 18%, again, up or down after earnings come out. I'm throwing these options numbers in there just as a change of pace here to give you some new data points to think about with these companies. The options market, just like regular investors, don't always get it right, but sometimes they can come pretty darn close to it. Yeah, in 2021. Absolutely. Okay, Wednesday, February 23rd. Now, I teased this a little bit when I was talking about Coca-Cola. And again, Coca-Cola, I'm going with, that's my DELL pick for this week. On Wednesday, Pepsi's CEO is scheduled to present at the CAGNY conference. I do not know what CAGNY stands for right this second. I forgot to look that up. However, Pepsi is entering fiscal year 22 with a lot of momentum, right? PEP is the ticker symbol for PepsiCo. Now, if we look at this, it's very similar to the S&P 500, but they had this big run up here at the end of January. But then for February so far, they've been pulling back, but the last 3 sessions have been green while the S&P 500 has been red, right? So why is Pepsi green the past 3 sections? Defensive stocks. Just like Coca-Cola, Pepsi is considered a defensive stock, and that's where people want to go when there's fear in the market. All right, so that's the momentum that Pepsi has right now, and you can, I know it's hard to see on your screen, but on the bottom right side down here, The relative strength index is down to a 32. And remember, 30 and below would be considered oversold. The RSI plus MFI, which is relative strength plus money flow together for this one, it's also down towards the bottom at a 35.5. So just a couple of point difference there. So it's sitting at the bottom and it's really just waiting to go. It's like the rubber band's been pulled back and it's just ready to be snapped and let go. So with that said, in this conference that the Pepsi CEO is talking at, we could be looking for, brand support. What's out there? What's the sentiment, right? The capability of reaching the high end of its long-term financial outlook. That's what I'm watching for the CEO of Pepsi. Where do they think they can take this thing? Because if we look at the stock, more history of it. I mean, look at the rise that it's been on since those March 2020 lows. Look at that. I mean, it's been on a great run. Even before that, 2019, big run up. Really big run up in 2019. So how much higher can it really go? And I think the CEO is going to shed some light on that and give us the financial outlook and where they think they can go as a company in the short, medium, and long term. Okay, we get earnings from Lowe's, ticker symbol LOW also. And again, Home Depot the day before, and then Lowe's here on Wednesday. I think both of them are set up pretty nicely and can do a pretty good job. Now, Lowe's, the RSI is down 37. The money flow from Lowe's has just dropped off a cliff starting February 10th and just boom, money's been sucked out like a vacuum cleaner. And now it's sitting at this low about 32. Okay, so it's really, really close, just a couple points away from being oversold. It also has this support area here right at about $220. Okay, I should have put this line on here earlier. But so it's sitting there at support. It bounced there January the 24th when the market, the S&P 500, the Dow, they hit their lows for the year. It had a 3.2% bounce on that day. Now, Lowe's has an estimated EPS of $1.71 a share with revenue of $20.92 billion. And again, the options market is saying there's an 8% move here, just like with Home Depot. All right, the next one here to report, Consumer Analyst Group of New York. Yep, that's it. Thank you for sharing that. Greatly appreciate it. I should have looked that up and been more prepared. Next one, discount stores are where people are going to go because of high inflation. Want to save money. TJX companies, TJ Maxx and Marshalls, I believe is also with them. So TJX also reports this is a discount retailer. This stock has been literally all over the place. Retail report comes out and retail report's good. The stock rallies. Retail is bad. The stock just tanks. It's a stock that has just been all over the place, but they report an EPS of 91 cents a share and revenue of $14.2 billion. The option market says a 9% swing once the numbers come out. All right, so with Home Depot, Lowe's, TJX companies all reporting, home improvement and discount shopping, I think, are bullish places for accumulation. I don't think either one of those are going to slow down, especially as prices go up. Okay. Also, watch TJ Maxx or TJX companies for their guidance. I think this will be a critical one because discount shopping is something that people have in their minds right now, and people are doing it. They're going to off brands to buy things when the brand names are either sold out or the price has just gone up too much, right? Listen for guidance on the second half of the year. Where do they see it? Do they think that the company is still going to be able to have their inventory, be able to sell it, and make a bit of a profit? Listen for that guidance. It's going to be very key. If we look at the companies that have already done their earnings for this season, many of them have gotten or have imploded like Roku. A lot of times because of guidance, not because of the current earnings situation, but the guidance of what's going to happen in the future. So this earnings season guidance has been more important, I think, than their actual how much they beat EPS or earnings by, in my view. All right, so we got that right. A couple other ones that are reporting that are interesting. Overstock.com, again, retailer, online retailer, kind of Amazon-ish. Ticker symbol is OSTK. They report earnings. They are down 32. Look at that. They are down 32% year to date, and they have an estimated EPS of 29 cents a share on revenue of $643.99 million. The option market is showing a 31% move off the numbers. That would be either a huge blow to the company or maybe a win. And if we look here a little closer here, again, this is the daily chart that I'm always showing the daily chart because it gives us the best view there. Sorry, wrong button. Gives us the best view. If we look here, they bounced right around, let's call this $38, $39. They bounced there. Twice they did that. Let me put that line right there. They did it here. You can see this green box at the bottom here, the one to the right. They bounced on that right there at the end of January. And then again, when they closed on Friday, they were right on that line. Now, RSI is at a 38, so it's on the lower end, but it still has room to go down. So maybe, depending on their guidance, maybe this is one to start looking at because it's discounted. But again, guidance. Another one, completely different, but still online. eBay also reports. Ticker symbol is the name, EBAY. Now, they separated from PayPal, and they're in a transition right now due to that. But they're reporting earnings too. Now, they're down 16% year to date, not as bad as Overstock.com, but still 16% year to date. They are down and in the hole. They have an estimated EPS of $1 a share on revenue of $2.6 billion. Now, the option market shows a 13% move off the numbers, again, up or down. Now, remember how Shopify took a hit last week. So watch out for any weakness in guidance for both of these, Overstock.com or eBay. Look to see if sales are slowing, if they think that sales will slow in the back half of 22. I think they will. I think on retailers, the back half is going to be a slowing period, maybe a normalizing phase that we're going to go through. But I think it's a good accumulation phase in the market. Now, remember, eBay is transitioning away from PayPal, so that could provide a little bit of unpredictability in their earnings. Also, Hertz Global. They were a public company once. They went private. Now they are back again as a public company. So they are reporting their earnings for the first time as being a public company for the second go at it. HTZ is the ticker symbol there. That load for you. They're forming a little right now, and it is I guess a top here of $25 to $27 and a bottom here on the range of about 18, maybe 17 at the lowest. But it is or has been using its 200-day moving average as support. It did so back here on the 24th, 26th, 27th of January, and on Thursday, Friday of last week. So with their earnings coming up, it'll be interesting with automobile prices just through the roof. How's that going to affect their margins? But I guess we'll have to wait and see if maybe increased mobility is helping to offset higher costs. And are they passing those costs along to consumers? My guess is yes, because of what CPI data shows us, right? All right, so they do have an estimated EPS of 74 cents a share on revenue of $1.96 billion. And again, the options market shows a 19% move off the numbers. And yeah, it's right now sitting on that 200-day moving average that a lot of companies have actually found themselves to be under that average. So they've been holding up pretty well. And I think inflation and increased mobility is what's allowed them to hold up so well. All right, another one that kind of gives me a red flag to kind of stay away is Skills. Ticker symbol is SKLZ. Uh, this one has just been going down and down and down. It's tried to find support down here, $3.50. I guess I could give it as some place of support. But look at this. Look at this fall. Look at this. This is just incredible. It had an all-time high of $46.30. And that was over a year ago, right? So they have come down a lot. Now they've got an estimated EPS at a loss of 16 cents a share with revenue of $113.95 million. Now the options market's crazy on this one because they're calling for a 26% move when the numbers are dropped. Beware of Skills. They're down over 50% year to date. And shares dropped sharply the last time they reported earnings. So my guess, just stay away. If we look at earnings right here, and earnings, well, they were green. They did beat, right? Look at this. Let me pull last time's up. They beat EPS by nearly 200%. And they were basically in line with revenue, $102 million. The stock did have a 8.9% run 2 days after earnings, and then a sell-off. Now, right on the same day as earnings, though, it did drop the next day by 8%, right? So very volatile move. Earnings come out, it drops 8.5%. And then 2 days later, it shoots up 8.9%. And then it started its decline to where it is right now. So just be careful with that one. All right. And I know it's a popular one with retail investors. And I know there's a lot of bag holders out there with this one. So do be careful. All right. Going to Thursday, February 24th. And there is a ton of earnings coming out on Thursday. Like there's so many. I didn't know which ones to pick. I mean, going down the list, it's just wow, a bunch. And a bunch of good names too that are reporting on Thursday. But the first thing I'll say about Thursday is Meta Platforms, ticker symbol FB, We know the implosion this company has had recently over last earnings report, that big, humongous gap down that I'm wondering if one day that big gap down might get filled in. I don't know on it, when it finally does a reversal and gets some legs again. But the reason I'm bringing up Meta Platforms is because Mark Zuckerberg is scheduled to give a speech on, quote, AI in the metaverse. What's that going to cover? Hopefully, for anybody who still wants to invest in Meta Platforms, formerly known as Facebook, hopefully there can be at least a path of redemption, a path forward for the company, if anybody still wants to invest in Meta Platforms, that is. It used to be a cash cow, literally. This thing made investors a lot of money. It just brought in huge amounts of cash and had big margins. So here's what I'm hoping Zuckerberg will say. I hope he'll say that we made a mistake, we messed up, here's how we're fixing it, and here's what we're doing moving forward. Here's our end goal vision. Because that's what CEOs do, right? They give a vision for the company to go meet. So hopefully the talk's going to cover their current any breakthroughs they have in technology, because they're spending a lot, they're doing a lot of research with the metaverse and augmented reality and virtual reality and all of that, video. So hopefully there can be some sort of breakthrough, some sort of reward for the hard work that they have put into the technology that they're building. Hopefully. And then, of course, paint a beautiful picture of the future, something to get people excited about, not feeling like there's going to be government overreach or any of that type of stuff. Get away from that aspect of it and lay out the groundwork for where this, quote, metaverse is supposed to take people. What are we going to experience, right? And how is today's metaverse going to be different from tomorrow's metaverse, right? How are you going to grow? Show investors. Maybe it'll work. Okay, earnings, the biggest, and this is an odd one here. The company's called VRAY, one word, VRAY. VRAY is the ticker symbol. I had no idea what this company did until I looked it up here. Now, let me pull this chart back in a little tighter, and you can see it's got resistance, and it's been in a downtrend, and it's been coming down. This is a health technology company, medical specialist. They've got an $650 million market cap. The reason I brought this company up is because the option market has this company set to make the biggest move on Thursday. The biggest move. The one-day move that the options market is predicting is 52% when earnings are dropped. When the numbers are made public, a 52% move. That's the only reason why I'm talking about this right now. Because that's a pretty big move right there. 50%, 52% that is. It's at $3.67. So if they can somehow beat these earnings right here, and it's a loss of 16 cents a share on $19.78 million. Now, they are down 30% year to date. So we'll see what the option market if they're right on this one. I'm definitely going to be following this one. I got it written down and circled because I want to see what this thing could do. I'm very curious about it. Okay, moving off of that. We have got a wide variety of earnings on Thursday. That's going to tell us a lot about our economy and how the economy is moving in the future. Anheuser-Busch, ticker symbol BUD, BUD. Moderna is reporting mRNA. We get a pinch of EV companies like Li Auto, ticker symbol LI. We also get the, do I want to call it an underdog at this point, Nikola? Since the old CEO is out and management's been replaced, can I call it an underdog? But Nikola does report, and just to show you, NKLA, Nikola, I don't think it's going to be, it's a big competitor to any other EV company right now. But during their last earnings, let me just show you this. Their last earnings right here on November the 4th, they had a 21.48% move on the day. Nikola. Yeah, Nikola, the company that had the truck rolling down the hill. Huge earnings last time around. So what's going on this time around? The stock has definitely pulled back. That was a high of, let's see, what is that? 1555, it looks like. And now it's down to 792. So Nikola reports, and also Li Auto for the EV sector on Thursday. We also get tech companies like DELL, Autodesk, Vmware is another one. Vmware, VMW. And of course, DELL is DELL. And then Autodesk, ADSK are the ticker symbols there. But look at Vmware here. They've been in rally mode since the middle of December, right? And just been moving up. They only had hardship, of course, right before their last earnings. They had a big gap down. But since this rally they've been in the beginning of December, they didn't really have a downturn until February 11th, when they dropped 6.4%. And now they're sitting right here on their 50-day moving average. Right there on support, right at their 50-day moving average. And remember, I haven't said this in this video yet today, but the 50-day moving average, bullish above, bearish below. All right, a simple phrase to remember. So it's sitting there. Can it hold up? And I did not check what the options market says. Let me just put the ticker in here. VM, where are you at? There we go. VMW, there it is. Options market says a 9% move, potentially, off the numbers. It's not big. The implied volatility is a 37. The historical volatility is a 30. So not a whole lot of volatility in the options market there for Vmware. So that's cool. FUV, no one liked the stock but me, LOL. They're having their 2/22/22 event, day at 2/22. I like their rental model, and they may release a second, more affordable, easy to build electric vehicle. Yeah. Let's see here. FUV there. I like Arcimoto. I really do. I think their vehicle is cool. It's a fun, playful vehicle. It's a twist on the old, golf cart. You can drive the thing down the road, and I mean, it is just, I think, an awesome. What I can really see an Arcimoto doing, just as the entrepreneur in myself, is DoorDash in a metro area. I think it would be great. Even DoorDashing in a suburban area, right? Uh, I think that I mean, a kid, in high school, just got their driver's license, you know, they could get a fleet of Arcimotos and have you know, a fleet of DoorDashers, running for them, and, that could just be a cool little thing. I wish this technology was around when I was in high school for sure. Long shot, they're gonna lose money for another year or two. Yeah, but, they definitely have, a very, unique vehicle that the market will need, especially with all of this delivery. That I mean, the delivery business is just expanding into new categories. I mean, you look at DoorDash. They're delivering flowers, for crying out loud. It's not just fast food anymore. Uh, they're delivering anything and everything, and I could just see these Arcimotos totally being utilized. In an urban or suburban setting, uh, DoorDashing it. I mean, man, I wish I was in high school again. I'd do it. uh, okay. Uh, Continuing on there, VMware. All right, Thursday. We also have fintech companies like Block, formerly known as Square, SQ, reporting earnings as well. Have the cursor over here looking at the options market. Square's implied volatility is actually really high, or Block, I should say. Let's pull up their stock chart here. SQ is the ticker symbol. Now, Square's got an implied volatility here of a 99%. Their historical volatility is 84%. So it's an 18% difference, rounding out to a 26% potential move based on the options market there and their earnings. So here we go with Block, 23 cents a share on $4 billion in revenue. If they can top that, then maybe they got a shot at that. What was that again? 26% move that the options market is looking at. If it's a 26% move down, that's not going to be so good, because we look at this. We got to go way back to get down there again. But you know what? It's almost doable. If you look back here at where support was back before the crash in March 2020, if you go back that far, we can definitely see an area here at right about 83, 85. I'm going to put it right here on $85. Put a line there. And then let me come in here like this, and I'm going to measure its closing price down. That's a 13.5% move from closing price down to $85. So if it goes 26%, then we're looking at about $70 a share. And quite frankly, we go to $70 a share, and that's not far off from where things were prior to the pandemic. That's interesting. That is. There again, there are just so many companies to choose on Thursday. I didn't do too deep of a dive. Another one is Coinbase, right? COIN is the ticker symbol for Coinbase. They also report. Coinbase doesn't have a move as big as Block or Square, however you want to call it. Coinbase has got a 19% move potential when the numbers come out. So here's Coinbase. This is one that's just trapped a lot of investors on day one. A bunch of them probably cut their losses after the rally here that ended in November of last year. But it's got a low here, recent low of $168. $168. So a 19% move from its Friday close would take it down to about $150 a share. If it went up, that's interesting because that takes you right about to their resistance area between $120 to $125 a share, and also that 50-day moving average. So that's very interesting. Could they get a bounce to that 50-day moving average? $1.94 a share, $1.93 billion in revenue. The one thing that I've always thought about with Coinbase is when cryptocurrency is volatile, moving a lot, right? If it's going up and down a lot, then Coinbase is making more money because Coinbase makes their money on trading fees. So the more that Bitcoin is moving, the more Coinbase is making. And I know right now doesn't count for the quarter they're reporting for, but just February 17th, Bitcoin dropped 7.6%, right? Going back further, February 4th, Bitcoin popped 11.4%, right? So all of that trading action gets bundled up into transaction fees for Coinbase. So the more crypto moves, the more money that Coinbase can make. And I have to, I mean, I can't not imagine that they're not growing their subscriber or their user base, right? So that's just my quick thoughts there on Coinbase. And again, our options market has it at a 19% potential move up or down. So we've got those. We also have earnings on Thursday, and Bitcoin's at 39,319 right this second. I should have mentioned that a little bit a couple of seconds ago. Okay, we get earnings in the real estate area. iBuying competitor Opendoor, ticker symbol OPEN, OPEN. They report their earnings also, and you can see Opendoor. It's also come way down. It seems to have a floor here of $8.50. It seems like they're trying to maybe build up a bottom right there. And let's see here what the option market is calling for Opendoor. I think it's actually pretty high. Okay, open. Oh, well, that doesn't work too well. Okay, Opendoor. Yeah, it is pretty high. The implied volatility for Opendoor is 115%. The historical volatility is 83%. That's a 39% difference, representing a 27% move after the earnings come out in the after hours on Thursday. So that is a really big move there for Opendoor. The options market thinks it's moving a lot. Okay, now if it did move 27% from where it closed on Friday, 27 takes it down to about $7.75 a share. Or if we go in the opposite direction and go up 27%, nope, went too far there. That takes it to about $13.50. So that's a pretty big spread. Yeah, these are all good news there. These are all bear plays. Correct. Yes. I do not think many of these are going to be going in the green. Some of them are. Some of them could be. Coinbase could go in the green. That one, potential. Just because my theory of the more volatility there is in crypto, the more Coinbase makes. So that one's possible. Open Door. This one, to me, it could be possible only because of what Zillow reported about being able to sell their homes for more than they thought they would be able to, and they were able to sell more homes quicker. So with Zillow leaving the iBuyer system, right, which is basically flipping homes, they produced really good. And let's just go look at their earnings right quick. When they posted their earnings, look at this for Zillow. Zillow is not in the iBuyer anymore, but they still have homes that they are trying to sell that they have in their inventory. Open Door is a company that's been doing iBuying a lot longer than Zillow had. They're still doing it. Now, Zillow moved up 34.5% over the next 1, 2, 3 days after it reported earnings, and a big part of that was the iBuyer selling of their homes. So Open Door does the same thing. I could see this one being a positive. I could. It just, what really depends is their cost, right? What are they buying these homes for? But the housing market is just so hot right now. That's a possibility. But most of these other ones are all negative. We also get earnings from mortgage loan provider Rocket Companies. This is another one. Retail investors have made this one pop before in the past, back when things were a lot easier, right? But this thing is just way down, and I suspect that it's just going to continue going down. It's a growth company, and growth companies are just getting beat over the head right now with rising interest rates. Look at down 10.3% year to date, down 38% over the past 365 days. Just not looking really good. And it said, here's the news headline right here. Rocket Company shares finished 2021 modestly above price target amid growth, Webbush says. So that means they didn't do so good, but they did okay, right? So it's not going to make their stock move in any big way that I could see for sure. All right, then finally, another retail favorite, Beyond Meat, also reports on Thursday. Ticker symbol is BYND for Beyond Meat. I just don't think there is a big enough market for Beyond Meat. I mean, I know it's going with McDonald's and other fast food places, which is good for it. But again, I just don't think that it's going to amount. There it is. Options market has implied volatility at 90%, historical volatility 84%, and a difference of 7%. So that's not very big. This thing is probably just going to be a non-mover. Either way, it's just probably going to continue to slowly creep down to the right instead of up, but down. Edward Dower, former BlackRock portfolio manager, says, and fraud, financial collapse imminent. Yeah, that is interesting. There's a lot of negative headlines out there, and we can just get so wrapped up in it. That's why, for me, even though I'm pointing out these companies that have earnings this week, and some could go up, majority of them are probably just going to continue going down mainly because of guidance. The market is just running so hot right now that the only direction it really can go is down. And that's why for me, for example, I've just been playing with ETNs like SPXS, for example. So when the market falls, at least I'm making something, right? Did I just miss something? Oh, for some reason it just my chat here. Sorry, I think this my chat got crazy here. I think we are going to explode downward. I'm exploring leaps and with puts. Yeah, I think that's a smart play. I do. And that's why, for example, I'm using options like the SPXS, which is an inverse play on the S&P 500. I just think it's just there's no way it can continue going up. I just don't see it. The market is just running so hot right now that yeah, it's just we're at an end of a cycle. I guess is the real thing here is we're at the end of a cycle, and there are so many different cycles that you can look at, right? Business cycles, real estate cycles, economy, even country cycles, right? How a when you have a superpower and then you have a rising power that is rising up and it takes on that superpower, then that always erupts in conflict, a war. And we've been in this big overarching cycle of every is it 80 years, I think every 80 years there's been a major conflict, and we're at that right now. I think they're the fourth turning. You got 1, 2, 3, and 4 turnings, I guess is what they're called. I'm not an expert on this in any sense. Um, but the fourth turning is we're at the end of that, right? The saying of what is it? Oh, I can't remember it. I don't want to butcher it, but the saying about hard times make strong men make good times make weak men make hard times. I don't want to butcher it, but it's something like that, right? We're at that end of the cycle in the economy and with the different countries. So it just doesn't look good right now at all. All right. Yeah. Italy, Germany, we look at it in Europe, for example, S&P 500, all ready to dip down in Bitcoin. Yeah, absolutely. I think we're going to explode. Yeah. Yeah, I do too. I agree. Totally agree. And that's why I've been using these ETNs, and they've been working so far. All right. Friday, there's only two that I'm watching for earnings. That is, one is Foot Locker, and again, options market looks at a 15% move. Also, Lending Tree is out there with Upstart coming out with good things to say. Lending Tree is a bit broader based on the different types of loans it does, where Upstart is really limited to just a couple different loans and going into the auto loan business. But Lending Tree is another one, does different loans. They have earnings that come out. Ticker symbol is Tree, TREE, and this is on Friday when their earnings come out. Chart load here. You can see they've been in this another, again, it's like everyone we've pulled up has been in this immense downtrend for a while now. Look at this. It's down 10% year to date, 68% over the past year. It is down. That's just, see, we can't always just go up, right? So yeah, Lending Tree is one that I'm curious about. And then Cinemark Holdings, ticker symbol is CNK. I'm curious if people are getting back to the cinema again. This one's been a wild swinger, just completely wild. But you know, the whole AMC. Can AMC? Are people going to go back to the theater? This thing's actually up 8.2% year to date, but it has been just wild swings. Wild swings. I think it was just a coincidence that it was down 8.2% to start the year. So that's why it's up the 8.2%. And over the past year, it's down 19.7%. So even long-term investing on this, you're not making money. So yeah, that's what we got. All right, what are your thoughts on UNG, United States Natural Gas? Natural gas right now, I think the whole Russia-Ukraine situation is going to be a big player for natural gas. Here's what I would like to see. I would like to see the United States become, all right, here's my thoughts on natural gas, all right? The United States had the ability of being a producer of natural gas for Europe, being a supplier. When the United States was energy independent and was able to export more than import, that was a good thing. Now, the whole Russia-Ukraine thing, Russia can just turn the pipes off, right? And then Europe is going to be hurting. They're going to need that energy from somewhere. They're going to need that natural gas. And the United States could have been the provider of that natural gas to Europe. But the United States has put handcuffs on itself and slowed the production down and put more regulations up and, slowed the whole process. That's going to make the price go up over the over time here. I'm totally bullish on energy. I think it's going up. Yes, I think the USA needs to be energy independent. Absolutely. What is that one's? Wow. Sued two women who claimed she was born male. Okay. Interesting. Yeah, energy independence, I think, was very important, and it was dumb of us to put handcuffs on ourselves, right? Tie our hands behind our back. Why? We shouldn't have done that. So, yeah, but I'm bullish on energy because of that. Now, if we can become energy independent again and start shipping out and exporting energy, especially to Europe, we could have done a whole lot better, and maybe this Russia-Ukraine situation wouldn't even be happening right now if we were still energy independent and were able to be an exporter to Europe. Talk to Mr. Biden then. Yeah, I would. Yeah. Absolutely. I'm not sure if Mr. Biden is. I don't know what the right word is. Anyways, moving on. We could probably talk about this in pretty great depths about Mr. Biden and what he's accomplished, right? I don't know. All right. Well, that was all the companies there that I've got for this week that I'm watching. Again, it's a short week. Markets are closed on Monday. I think the markets is going to continue having a hard time making anything. And look at this. See this big. All right. Let me do this. Well, I've got the chart pulled up. I meant to do this with the chart pulled up. Just going to go back here in history just a little bit. This is where, if conflict continues, right? If conflict continues right here, this top right here, 110, 115 at the top, and about 90, 95 at the bottom there. That was in 2014, right? Okay, let's go back a little bit further. Let's tank the market just in case. Biden, LOL. Yeah, Joe Biden. All right, that peak on the chart, it looked like it was really up there. But then we go a little bit further back in history. Here we are. Here we are, right here. Now we're up to 2014, 2020. Not the year. This is the price. $2,000 right there. That peak, that was in 08. And just think, $2,000, and the chart's moving slow. Let's get it back here. And here we are at $15, right? That is just, there is so much room to go up, and conflict is just going to continue to crank it up and make energy go so much higher. That looks great. Yeah, I mean, can you imagine? That was $2,000 back then, not that long ago, 15, 20 years. No, not even that long. What am I thinking? 7 or 8 years at the most. Now, $2,000. Yeah, that's where things could be if the conflict actually occurs and gets worse and happens, right? Europe's going to be scrambling for energy, and we've got our hands tied behind our backs. It's not good. All right. Thank you guys for joining me tonight. I greatly appreciate it. I'll go ahead and wrap it up here. That's everything that I wanted to talk about. So yeah, enjoy your week. Remember, the market's closed on Monday, opens up Tuesday, and it's going to be another twisty-turny day ride this week in the market. And I think headed down, especially if conflict continues. Thank you very much. You have a good night too, and I'll see you guys on. I'll be live again Tuesday around 5:30ish, 5 o'clock, 5:30ish. Tuesday after the market closes, so I can see you then. And I got some videos coming out in between now and then as well. All right, thank you very much, and everyone have a wonderful President's Day. And thank you for watching. I appreciate it.